Hello everyone. Today we are going to analyze the HDFC Mid-Cap Opportunities Fund. It is the largest mid-cap fund in India. It has an AUM of about 77,000 crores, and this fund is charging a very high expense ratio of 0.72%. So whenever we are analyzing, or I am analyzing an active fund in any category, so the first question is it worth paying the fund manager, this high expense ratio? Because when someone is paying you extra, you're expecting them to outperform the benchmark, to say the least, and also probably compare this fund against its other peers to see how or where this fund stands in the mid cap category. So let's start with comparing this to a benchmark and see how well it has done currently and also historically. So in the last 5.8 years, about 6 years, it has outperformed the Nifty Mid Cap 150 index. And you can see that both of them are a mid cap fund, essentially, right? So pretty much the trends are the same. I think there have been times where mid cap benchmark has done better than the HDFC Mid Cap Opportunities Fund. So that's why you see a drop here. So there isn't like a consistent excess return since 2019. So you can see it's been up and down. So currently it is showing excess returns, right? But the trend, in terms of excess return, it has not been consistent. Next, we will quickly go into where the risk sources are coming from. So since we have chosen mid-cap 150 as our benchmark, not so surprisingly, I think you can expect almost all the risk is coming from the mid-cap 150 benchmark that we have chosen, right? So you are not seeing a lot of factor exposures or other asset class exposures here, right? Basically, it's a mid-cap fund, so you expect it to have a risk coming from the mid-cap benchmark. Next, going into what we already saw in the excess returns chart, whether the fund manager has outperformed the benchmark and has generated alpha. So out of 6 years, the fund has outperformed on 4 years. And when it comes to alpha, 4 out of 5 years, the fund has generated alpha. I think in terms of consistency of alpha, if you see whether on every month, right, whether the fund has cumulatively generated alpha, that has not been the case. I think there have been months where the alpha is too low to even see, and recently, yes, it has shown some alpha cumulatively, right? So I think overall, it seems like I'm in the middle, so it has not outperformed extremely well. It has outperformed in certain years like 2022, and I think in 2023 it's just 1.2%, and in 2024 it's 3.1%. In 2020 and 2021 it has underperformed the benchmark. So even if I look at the consistency, it's not highly consistent in terms of returns, but overall, if you see, it has outperformed, right? Now that we have compared this with a benchmark, let's quickly see whether there are any other alternatives that's cheaper, but gives you the same exposures as this fund. So we will go to fee reduction tab here. So you can see there are a lot of funds here, basically in the mid cap category with lower fees. And to see how, in terms of like metric, right, you can also see the correlation here. Almost all of them are greater than 0.9 correlation, right? So you can see almost all the funds here, or not almost all the funds here are cheaper than what HDFC is charging. But there are some funds which has not performed to the level as HDFC. except the Edelweiss mid-cap fund. I think it has been kind of a trend in a lot of my analysis. I've seen Edelweiss in a lot of categories charging lower fees and more or less the same performance. And in this case, it has outperformed the HDFC fund recently. And there have been times where it has underperformed as well. But recently, it has Edelweiss has done well, right? So you can see this is the direct version and this is the IDCW version, right? So we kind of like understood there are cheaper alternatives to this fund. So now let's quickly see where HDFC Mid Cap Fund stands in the mid cap category and see where it ranks in terms of performance, in terms of other metrics as well, right? So I took the largest top five mid-cap funds in India, and when you compare it with HDFC, right? HDFC kind of in terms of performance, it stands recently at the second position, right? I think Motilal Oswal has done really well in the last few months, you can say, right? At least, and the third position goes to the I think Axis Mid-Cap. I think in terms of rolling returns, this is something that we added recently. You can see the consistency of the rolling returns with various look backs here, with 5 years, with 3 years. I think one interesting thing about 5 years is that it has not gone down at all in terms of like returns as a whole. Um, and I think as expected, like you already saw the performance, which in terms of like Motilal has done really well. So you also expect it to be on the higher end in the risk versus return category. Now, moving on to the fundamentals, I think nothing surprising here. This is an equity fund, so you expect all of them to be in the equities category. Again, no surprise here, right? So it's a mid cap equity India fund, right? So almost all your exposures are from India. And pretty much, I think the sector exposures are kind of more or less on the same lines, except the Motilal Oswal, where you can see a heavy tech exposure, right? It's almost like a 10% difference. The second one is the HDFC one, which has 15%. So it has about like 24%, which seems like the largest in the information technology sector. And in the other sectors, more or less, it's the same, right? I think, except probably you can say HDFC Mid Cap has heavy financial exposures compared to the other mid cap funds. I think one thing that I want to highlight here is since it's a mid cap fund, you can also see a lot of size exposures here. So even closing your eyes, if you're going to see this fund, right, you can easily guess that a lot of your risk is coming from the size exposure, that is the size factor. And you can easily conclude that this fund has mid cap and small cap stocks in it. Now, going into the second comparison, where I think we already saw the Edelweiss mid-cap fund has beaten the HDFC, right, with lower fees. Um, you can also quickly see that both Edelweiss here, I've replaced Edelweiss in this analysis with, I think, the lowest performing one here, which is I think, DSP one. I've replaced that with Edelweiss. More or less, Edelweiss and Motilal, they are performing the same and has recently outperformed all the other peers, right? If we quickly go into the statistics, right? So the Edelweiss is charging the lowest here, and also you can see Axis is the second lowest, and SBI Magnum is probably the highest expense ratio. And let's quickly check. I mean, it's the least performing one for the highest expense ratio. Um, and finally, we can also look at, we already looked at the benchmark comparison. We can also look at the comparing it to the benchmark, which is the Nifty Mid Cap 150. And you can say HDFC, Edelweiss, as well as Motilal, they all have outperformed the Nippon Mid Cap 150 index. One thing to notice here is the Nippon Mid-Cap 150 has 150 stocks in it, whereas the other ones, which is the HDFC, they are relatively lower than the mid-cap 150, right? So I think the highest one comes from the Axis Mid-Cap Fund, which has about 104 uh, stocks. Also, quickly to point out that the Motilal Oswal only has 22 securities in it, which is super concentrated, right? Whereas if you compare it to Edelweiss, it is much more diversified, right? You have 60 more stocks in it. So something to look at, when you're looking at the outperformance just alone, right? It's very concentrated, and you can say that the outperformance is primarily is coming from the concentration of the portfolio itself. I think overall that sums up the video. I think first we saw whether it has outperformed, has done well compared to a benchmark. There was not consistency in the performance, but overall it has done well relatively. I think currently it has done well. But when you compare it to its cheaper alternatives and also other peers, which are charging lower than HDFC mid cap, it has not done well, right? For the expense ratio, high expense ratio of 0.72%, it has not done well compared to the other mid cap funds in the mid cap category, basically. So I think that sums up this video. Thanks a lot for watching. See you next time.